Good morning, Paul Georgie from Allendale. It's January 25th, 2012. It's Wednesday morning, and grain markets settled in the overnight trade higher, although they did back off a little bit from their highs made earlier in the morning. But and a lot of that could be coming from pressure from outside markets. The dollar up sharply here this morning. The crude oil down about $1 as we speak. Gold is lower. Stock markets are lower. So getting some pressure and some profit taking, I believe, after yesterday's sharp rally. We could see a quieter day today after that sharp rally of yesterday, but still a lot of things going on. In the macro markets, Greece is scrambling to work out some kind of a debt solution with its creditors. The last deal, the creditors walked away from the proposal that Greece had put on the table, and then the EU ministers also said no deal with the Greece proposal. So they're scrambling. They've got a early March deadline to pay off some debt, and they need that money coming from the EU. But first, they've got to work out a solution with the creditors. So we're going to continue to hear about that over the next several weeks. Other thing that's going on, we have got strong basis here in the U.S. Cash markets are strong compared to futures, where we've actually seen some areas 10-15 cent increase in the basis in the last week here in central Illinois and central Indiana. The big demand has been on shipment of grain to the Gulf, which has not been a factor here for a while. And the belief in that is that it's come really twofold. The harvest in Brazil has been delayed because of rain, so if we got a later harvest there. The southern Brazil and Argentina have got issues because of drought, so they don't have as much grain that can go to the market. And also something that hasn't been talked about a lot, but seems to be a big situation for Argentina anyway, is they can't get any grain shipped out because of a problem they have in the port of Rosario. So that is providing basis strength here in the U.S. and cash market strength, while farmers are basically locking the doors, wanting more money for their grain, and that is a reason why we've seen the strength in the cash market, and certainly part of the reason we're seeing strength here in futures. Yesterday there was talk that Argentina was going to not export any grain because of the drought they've got down there. That's been denied by the Ag Ministry in Argentina. Also, there was talk that Russia was going to cease exports of wheat because of they've exported so much in the last month and a half that they don't have any more to sell. Well, there's a bit of truth to that, is that they have been very aggressive in selling grain. However, their livestock industry is continuing to grow, and that's been a mission of Putin's here for several years, is to be sustainable in their own protein source and their own livestock industry. So the livestock industry is demanding some. Prices have gone up, which should control itself. They said there's no intention of putting tariffs on at this time. Weather in South America is, better. I wouldn't call it ideal. It certainly has been better. There's been rain across Argentina that moved into southern Brazil here overnight, according to maps that we've seen from World Weather Inc., that they've got some moisture through most of that area, probably 80 to 85% of the area in southern Brazil. So it's been positive here. Another system is moving in potentially mid next week, which could bring some more rain. So their patterns of shifting, and it looks like the drought has ended, to where we could see some better performance in the grains that were not that did not get damaged by the drought. So also technical action. We've rallied the market sharply here yesterday. We went to some resistance areas, took out some technical points in the soybeans. Wheat has run up against some downtrend resistance levels, so all markets are sitting on some critical levels here. A further rally is needed within the next day or two in order to keep this momentum going. Otherwise, we could see some setback here. And looking at outside markets, it could give us some correction here, especially after the sharp rally that we've seen yesterday in the grain markets. In the livestock trade, choice cutout values were up 68, select up $1 yesterday. No cash trade as of yet. However, futures are anticipating a better cash trade again this week. Overnight, we had futures sharply higher, or as we speak, actually. The cattle trade in the at the CME is higher, anywhere from 30 to 50 higher, and pork complex also very strong. The Feb futures are running up against November high resistance, 126.50, and then we had a high all the way back in July of last year at 127. Currently, we're trading at around this 126.25 area. So we've got a bit of resistance ahead of us here, but it looks like with the cash trade and the fundamentals the way we are, traders look like they're going to try to test that area to see if there's more buy stops above that. So be watching that closely. Also, the pork complex Feb hogs retraced or bought back the trend there, where we're working through the 50-day moving average here overnight, being up over $1 since we've settled back a little bit. But that's kind of a critical area to watch in the Feb hog complex. Pork cutout values were down 54, so a little tug of war going on there as far as who's leading the show. Higher corn prices have certainly supported the deferred contracts of hogs. Spreaders have been a big factor also in the pork complex yesterday. So stay tuned to Allendale Research. Sign up for the Allendale Research Center on the web. You can do that right online. If you're not a subscriber, we've got a lot more details and charts and information that hopefully will help you be a better marketer and better trader. So check that out. If you got any questions, give us a call, 800-262-7538. We wish you a very successful trading day, and I'll talk to you tomorrow morning. Thank you.